All right, let's dive into something that's been making a lot of noise in the crypto world lately. We've seen these charts flashing, and well, the question on everyone's mind is, could Solana truly be gearing up for like an explosive sprint past $300? I'm genuinely curious to unpack the signals here. Feels like something's brewing.
It's certainly a compelling moment. Yeah, definitely something worth watching closely. You've got this confluence of factors that really demand a closer look, especially when you consider Solana's track record in previous cycles.
Exactly, the track record.
Yeah, the historical context combined with what's happening right now in the market, it paints a fascinating picture, really does.
That confluence is powerful indeed. Welcome, everyone, to this deep dive, where our focus today is squarely on Solana, or SOL, and these, well, really interesting signals emerging from recent analyses. Our mission, basically, is to unpack insights from a whole stack of recent reports. There's a key analysis titled Solana's Golden Cross, Path to $300 and Beyond, which caught our eye. And we're also looking at supporting stuff from powerhouses like Cointelegraph, Brave New Coin, A-Invest, and Binance News, too.
Good sources, solid analysis out there.
Definitely. So we're going to explore the technical patterns, the things that often act as market catalysts. We'll look at the broader market movements, the big picture stuff, and also the significant institutional shifts that seem to be painting a potentially very lucrative landscape for Solana's immediate future. This deep dive isn't just about making predictions, right? It's about understanding the foundational forces at play in the crypto market, the why behind the what, trying to give you the context to interpret what you see unfolding out there.
Exactly. It's about looking beyond just the headlines, beyond the hype, and really understanding the underlying mechanics. It's the combination of these technical signals and the fundamental drivers like institutional money that truly makes this deep dive into Solana's potential so insightful, I think.
I completely agree. Couldn't have said it better. And to kick things off, let's zoom right in on what many analysts are calling the golden signal. It's a technical pattern with, well, significant historical weight for Solana, the kind of thing that often comes before some really dramatic price action. So whether you're a seasoned trader or maybe just getting your feet wet in technical analysis, the term golden cross probably rings a bell. It comes up a lot. But maybe for those who need a quick refresher, what exactly is a golden cross in the context of crypto charting? And, why does it carry so much weight? Why the fuss?
Right, okay. So a golden cross is a technical indicator that, yeah, traders and analysts worldwide monitor very, very closely. It's a big one. It's essentially a visual representation of a pretty significant shift in market momentum, upwards momentum usually. Specifically, it happens when a shorter-term moving average crosses above a longer-term moving average on a price chart.
Shorter crossing above longer. Got it.
Exactly. And in the analyses we're looking at here, and generally in crypto, this usually refers to the 50-day simple moving average, the SMA, crossing above the 200-day SMA. Think of the 50-day SMA as like a barometer for recent price momentum, short to medium term. It captures the market's immediate sentiment where things have been heading over the last couple of months.
Okay, the recent trend.
Yeah. And the 200-day SMA, on the other hand, that represents the much longer-term trend. It smooths out all the short-term noise, the daily ups and downs, to show the asset's overall direction over, say, the better part of a year. So when that faster 50-day average punches up through the slower 200-day, it's widely interpreted as a strong bullish signal, a really strong one.
Bullish meaning price is likely to go up.
Precisely.
Yeah.
It suggests that the recent buying pressure, the shorter-term momentum, has finally overcome the longer-term trend, which might have been flat or even downwards. It signals a potential new uptrend starting, or maybe a significant acceleration of an uptrend that was already kind of simmering. It's like the market is putting up a big flag saying, hey, there's been a fundamental shift here. We might be moving from consolidation or decline into a phase of sustained growth.
Okay, that makes sense. A shift in the underlying trend. And what's particularly crucial here, and something our sources really emphasize, is that this specific golden cross isn't just appearing on the regular SellUSD chart, Solana versus the dollar.
Yeah.
It's appearing on the SLBTC chart, Solana versus Bitcoin. Why is that distinction so important? Why should we, or you listening, care more about how Solana is doing against Bitcoin compared to just the US dollar?
Ah, yes. That's a critical nuance. It really highlights a deeper market dynamic. See, when we observe a golden cross on the SLBTC chart, it's telling us something much more profound than just Solana gaining value in dollar terms. That's good, but this is different. It's indicating Solana's strength relative to Bitcoin. And Bitcoin, as you know, is the market's benchmark cryptocurrency. It's the big one. The primary store of value for many in the crypto space.
The king, yeah.
Right. Bitcoin typically leads the market. When Bitcoin rallies, most altcoins tend to follow along. They get pulled up with it. But when an altcoin, like Solana in this case, shows a golden cross against Bitcoin, it means it's not just riding Bitcoin's coattails. It's actually outperforming Bitcoin.
Outperforming the king. That is significant.
It really is. It signifies that capital isn't just flowing into the broader crypto market in general. It suggests that capital might be actively rotating out of Bitcoin and into Solana. Why? Because investors are seeing potentially greater returns in SOL compared to BTC at that moment. This is why it's described in our sources as an infrequent but historically explosive signal. It's infrequent because outperforming Bitcoin consistently is hard. And it's potentially explosive because it points to a shift in, well, maybe not market dominance overall, but certainly in investor preference and capital flow within the crypto ecosystem. It's an indicator that Solana could be entering a period of real leadership within the altcoin space.
Historically explosive. Wow, that phrase really grabs your attention, doesn't it? Especially in a market as, well, volatile as crypto. But okay, how do we differentiate between genuine historical precedent, things that have actually happened, and just, hopeful speculation? Wishful thinking. Are there any counter-arguments or risks associated with relying so heavily on any technical signal, even a golden cross, even with Solana's history?
Nothing's foolproof, right?
Yeah.
That's a very fair and incredibly important question.
Yeah.
You're absolutely right. No technical indicator is a crystal ball. It's never a 100% guarantee. And the classic disclaimer always applies. Past performance doesn't perfectly predict future results. Things can change. The market context evolves. However, what makes this compelling for Solana is that it has a truly remarkable track record of backing up these SOLBTC golden cross signals with, frankly, astonishing growth. This history lends significant credibility to the current signal.
Okay, so let's talk precedent. What actually happened before?
Right. The most compelling example, the one everyone points to, comes from the massive bull market of 2021. A similar golden cross setup on the SOL-BTC chart back then triggered an almost unbelievable surge for SOL. We're talking 9,900%.
1,900%.
1,900%. To put that into perspective for you, that means Solana's USD price soared from under $20 all the way up to above $250.
Wow, under $20 to over $250. That's incredible.
It was a parabolic move. Very few assets, even in the wild world of crypto, achieve that kind of exponential growth. And what's important to remember about that period, that 2021 run, is that Solana was also rapidly building out its ecosystem. It was attracting developers left and right with its promise of high transaction speeds and super low fees. It was positioning itself as a genuine competitor to Ethereum.
So it wasn't just the chart pattern in isolation.
Exactly. The golden cross then wasn't just some technical fluke happening in a vacuum. It was massively amplified by fundamental growth happening on the ground. You had a booming DeFi summer, NFTs were starting to take off on Solana, and you had increasing institutional interest looking for high-performance alternatives to Ethereum, which was getting congested and expensive. The signal, the golden cross, essentially indicated that the market was finally recognizing and pricing in all that underlying value and future potential that had been building up.
Unbelievable. Nearly 20 times its value in that run. That's the kind of move that can, well, profoundly impact anyone's portfolio. And you mentioned track record plural, so it wasn't just a singular fortunate event back in 2021. Did it happen again?
No, it wasn't a one-off. More recently, actually, in 2023, another golden cross appeared on the SOL-BTC chart. And while it wasn't quite as dramatic as the 2021 explosion, let's be realistic, 1,900% is hard to repeat. It still led to a very substantial 1,000% rally.
1,000%. That's still a tenfold increase.
Absolutely, a tenfold increase from its lows at that time. Which, again, for any asset is incredibly significant and, frankly, life-changing for many investors who caught it. This 2023 rally was also supported by its own narrative. There was this renewed focus on the Solana ecosystem, kind of proving its resilience after the whole FTX collapse, which hit Solana hard initially. But developers stuck around, they demonstrated resilience, new projects kept emerging, particularly in areas like decentralized physical infrastructure networks, and also, meme coins really gained traction on the chain, bringing in users.
Right. The meme coin season on Solana was huge.
It was. So again, these examples, 2021 to 2023, they aren't minor fluctuations. They are sustained, powerful upward trends following that specific SOL-BTC golden cross. It really underscores how potent these specific chart-based patterns can be, especially when they combine with some kind of fundamental strength or narrative.
So Understanding this historical context, what does it tell us about the potential implications for you, the listener, as you observe the current market signals? It really highlights that these past rallies following Golden Cross setups are prime examples of chart-based tech patterns driving significant gains. That's a key quote from the analysis. This isn't just some abstract theory we're kicking around. It's a pattern Solana has demonstrably followed, not once, but twice, leading to immense value creation. It forces us to consider, maybe seriously consider, that when history seems to rhyme this loudly, especially with such impactful results in the past, while paying attention to these signals can provide incredible insight into potential future movements, it really underscores the power of these specific chart patterns, but as you said, always with an eye on the underlying fundamentals supporting them.
Couldn't agree more. History doesn't repeat exactly, but it often rhymes, as the saying goes. And in Solana's case, the rhymes have been pretty loud. Okay, so we've established the significance of that SOLBTC Golden Cross. But beyond the specific technical signals on Solana's own chart, we also really need to consider the broader market environment, the macro picture.
Right, because no coin is an island, especially in crypto.
Exactly. Even the strongest individual signals, the most bullish chart patterns, can be amplified or, conversely, dampened by these bigger macro trends and shifts in overall market sentiment. And right now, looking at the sources and the general market feel, the macro winds appear to be quite favorable for assets like Solana. It suggests it might be entering a particularly fertile period for growth.
You're talking about the return of alt season momentum, right? That's a term you hear thrown around a lot in crypto circles. But let's maybe clarify for everyone listening, what does that truly mean? What is an alt season? And why is it so important for an asset like Solana, especially if you're trying to understand these broader market cycles?
Precisely. Alt season is a distinct phase, a specific period within the larger crypto market cycle. It's essentially when altcoins, so that's alternative cryptocurrencies, basically everything that isn't Bitcoin, tend to outperform Bitcoin, sometimes dramatically. This phenomenon usually occurs after Bitcoin has already had a significant rally. Bitcoin leads, establishes a base, maybe consolidates its gains for a bit, and then investors who are maybe feeling a bit more confident, maybe a bit more greedy, start looking for higher returns. They begin rotating their capital out of Bitcoin and into altcoins.
Seeking bigger gains, basically, moving out on the risk curve.
That's a good way to put it. Moving out on the risk curve for potentially larger rewards. In a typical bull cycle, you'll often see this sequence play out. Bitcoin leads the charge first. It draws in the initial capital, maybe from institutions or more cautious investors. It sets the market floor. Once Bitcoin cools off a bit or starts trading sideways, that capital then often flows into the larger cap altcoins first. Think Ethereum. Then, if the momentum continues, it cascades down into mid-caps, like Solana could be considered. And eventually, if the bull run is really strong, you see it flowing into the smaller cap, more speculative altcoins. That whole sequence, that rotation, is what defines an alt season.
Okay, that flow makes sense. Bitcoin, then large alts, then mid caps like Solana, then small caps. So if that's the typical pattern, how do we spot an alt season actually starting? Is there a particular indicator like the Golden Cross for individual charts, but something that signals this broader shift? Something we can monitor that tells us, okay, the capital rotation seems to be genuinely underway.
Yeah, there are a few things analysts watch, but one key indicator, which is prominently mentioned in our sources, is Ethereum, ETH, outperforming Bitcoin, BTC. So you look at the ETH-BTC trading pair. When you see that specific pair start to rally strongly, meaning Ethereum is gaining value against Bitcoin, it's often taken as a strong signal. A signal that capital is beginning to rotate out of the market leader, Bitcoin, and into other large cap alternative like Ethereum first.
Kind of like the first domino falling.
Exactly. It often acts as a precursor, a leading indicator, for funds then flowing further down the chain into other high-quality altcoins like Solana. This whole process of what we call capital rotation is this dynamic movement of funds from one asset class or cryptocurrency to another. Often, as you said, it's a shift from perceived lower-risk assets like Bitcoin, the safe haven within crypto for many, towards higher beta assets like Solana. Now, high beta tokens, just to clarify for you, are those that are typically more sensitive to market movements. They tend to move with greater volatility, both up and down, than the overall market, represented by Bitcoin. Investors make this shift, this rotation, precisely because they are seeking those potentially greater, sometimes explosive returns that altcoins can offer during a strong alt season.
Okay, so putting it all together for those following the markets, what this really means for you is that Solana isn't just existing in isolation, doing its own thing based solely on its own chart. It's potentially benefiting from a significant broader market sentiment shift, a tide lifting many boats. Investors are increasingly looking for higher growth opportunities within the crypto space, moving beyond Bitcoin. It creates this powerful macro backdrop, a fertile ground where individual assets like Solana can really flourish. It's almost like getting a strong current pushing your ship forward, amplifying any efforts you make yourself.
Exactly right. And this alt-season phenomenon, this capital rotation, it's intrinsically linked to what we describe as liquidity tailwinds.
Yeah.
Imagine, yeah, a rising tide flooding into a harbor.
Yeah.
In this case, the tide is increased capital, increased liquidity flowing into the market, specifically the altcoin market. Well, pretty much all crypto assets might rise to some extent during a bull market. A rising tide lifts all boats, as they say.
Right.
When there are significant liquidity tailwinds, it means there's a substantial increase in the amount of investable capital flowing into the altcoin market generally.
Yeah.
It's not just sentiment, it's actual money moving in. And those high beta tokens we mentioned, like SOL, they are particularly sensitive to these inflows. They are strategically positioned to catch more of that incoming waves, more of that momentum, which means they can see disproportionately larger gains compared to, say, Bitcoin, or even larger, slower moving alts.
So more money chasing fewer, or at least specific types of assets?
Essentially, yes. More capital is chasing those potentially higher returns in the altcoin space, and this creates a more pronounced upward movement in assets that are perceived to have higher growth potential or are maybe technically better positioned. It's not just that prices are going up, it's that the market becomes much more efficient, maybe even aggressive, at moving capital into the assets it believes will deliver the highest percentage gains in that specific market phase.
It's like having a strong tailwind pushing a high-performance sailboat, right?
Mm-hmm.
If you're that sailboat, like Solana might be in this analogy, you're going to pick up a lot more speed than a heavy cargo ship, like maybe Bitcoin in this phase. This increased liquidity, this capital rotation into alts, it just creates such a supportive environment where Solana's individual technical signals, like that golden cross, can be massively amplified. It potentially makes those price targets, like $300, even more attainable. It really shows how intertwined individual asset performance is with the broader market's health and underlying sentiment. It paints a picture where Solana isn't just strong on its own merits, which it might be, but it's also getting a huge potential boost from the overall market conditions shifting in its favor.
That's a perfect summary.
Yeah.
The macro context is providing a potentially very strong tailwind right now.
All right, so we've looked at the historical SOL-BTC signal, the golden cross, and we've talked about these favorable broader market conditions, the alt season potential. Now, let's zoom back in. Let's get specific and look at the technical chart patterns that are actually shaping Solana's immediate price trajectory on the chart. You probably look at most often the SOL-USD chart, Solana versus the dollar. Our sources highlight a pretty fascinating pattern appearing here, one that specifically seems to target that $300 mark we keep mentioning. Can you walk us through what analysts are seeing?
Certainly. Yeah, focusing on the SOL-USD chart now, what we're observing is a pattern known technically as a broadening wedge, or sometimes more visually, called a megaphone formation.
Okay, megaphone. I can picture that, wider at one end.
Exactly. To help you visualize this on a chart, imagine two diverging trend lines. You have an upper resistance line that's sloping upwards over time, and you have a lower support line that's sloping downwards.
Yeah.
So the price range is actually getting wider as time goes on, creating that megaphone shape opening towards the right side of the chart.
Wider. Doesn't that usually mean more uncertainty?
It does indicate increasing volatility, yes.
Yeah.
The price swings become progressively wider over time within the pattern. It suggests that while the market might be uncertain about the ultimate direction in the short term, hence the wider swings, it's also building up significant pressure, significant energy. These patterns often precede a dramatic breakout. It could be in either direction, admittedly, but they are typically seen as bullish continuation patterns when they form during an established uptrend, which Solana has arguably been in.
Okay, so building pressure within widening boundaries.
Precisely. In Solana's current scenario, it has been trading within the confines of this broadening wedge for some time, and analysts looking at this pattern have pinpointed the upper resistance near $295–300. That level is specifically penciled in for a breakout. This isn't just pulling a number out of thin air, it represents a specific technical barrier identified by drawing that upper trend line of the wedge. A decisive break above that $295–300 level, especially on significant volume, would be the confirmation signal. It would suggest a strong continuation of the underlying uptrend and could indeed accelerate Solana rapidly towards new highs, maybe even triggering that next leg up.
So it's like the market is building up this potential energy within this widening channel, creating an area of increasing volatility, but also storing power. And when it finally breaks out of that upper boundary, that resistance near $300, it could truly launch into a new price discovery phase, like releasing a compressed spring. But, okay, is it just this one pattern? Beyond this broadening wedge, are there other technical indicators supporting this $300 target? Or is the case kind of reliant solely on this megaphone shape? Because, in technical analysis, everyone always talks about confluence, multiple signals pointing the same way. Is that happening here?
You've hit on a crucial point again. Confluence is absolutely key for building conviction in technical analysis. A single pattern can be misleading. And yes, thankfully, the broadening wedge isn't operating in isolation here. We have several other supporting technical indicators that seem to be reinforcing this bullish outlook around the $300 level, strengthening the overall case.
Okay, good. Like what?
Well, firstly, the sources point to a bullish weekly relative strength index, RSI. Now, the RSI, for you listening, is a momentum oscillator. It measures the speed and change of price movements, basically how quickly and strongly the price is moving up or down. It oscillates between 0 and 100. Typically, readings above 70 are considered overbought, meaning the price might have run up too fast, and below 30 is oversold, maybe due for a bounce. But a bullish weekly RSI means the indicator is firmly in bullish territory, often consistently above 50 or 60, maybe even pushing towards 70, but holding strong. And crucially, this is on the weekly time frame.
Weekly, not daily. Why is the weekly time frame more significant here?
Because weekly signals filter out a lot of the short-term noise. Daily charts can whip around quite a bit. A strong weekly RSI indicates solid buying pressure and sustained upward momentum over a longer-term period. It suggests that the underlying trend strength is robust and less likely to be just a temporary blip. It gives you more confidence that the bulls are genuinely in control over an extended period, not just for a day or two.
Right, okay. So a strong RSI reading on the weekly chart adds a layer of confirmation. It suggests this isn't just a fleeting daily surge, but something more sustained. That definitely adds confidence. What else?
Compounding this, we also see that SOL's price, at the time of these analyses, is positioned above key exponential moving averages, EMAs. Now, EMAs are similar to the simple moving averages, SMAs we talked about with the Golden Cross, but they give more weight to recent prices. This makes them a bit more responsive to new information and current market action. When an asset's price is trading consistently above these key EMAs, analysts often look at the 20-day, the 50-day, and maybe the 100-day or 200-day EMAs. It signals that these moving averages are acting as dynamic support levels.
Support levels, like floors, the price bounces off.
Exactly like that. Think of them as invisible, moving floors that the price tends to bounce off during pullbacks in an uptrend, rather than breaking decisively below them. So trading above these key EMAs is generally considered a strong bullish signal. It indicates that the asset is firmly entrenched in an uptrend, buying interest remains strong on dips, and dips are likely being bought up by eager investors wanting to get in or add to their position.
Okay, so let's recap the technicals then. We have the broadening wedge pattern pointing towards a breakout around $295, $300. We have a strong weekly RSI showing sustained momentum, and we have the price holding above key moving averages acting as support. It really sounds like it's not just one indicator shouting bullish. It's, like you said, a whole chorus of them, all harmonizing around the same message. The confluence of these multiple bullish technical signals, the wedge, the weekly RSI, the EMA positioning, all seem to strengthen the conviction around that $300 target.
That's the idea.
It's like having multiple compasses all pointing north, right? Makes the direction feel much clearer than if you only had one potentially faulty compass. So for you listening, this potentially means a higher probability that these technical predictions could indeed materialize, simply because the signals are reinforcing each other rather than giving conflicting messages. This kind of integrated approach to analysis helps build a much more robust investment thesis than relying on just one thing.
Well put. Confluence increases probability. It doesn't guarantee, but it definitely strengthens the case.
Now, this is where things get potentially even more interesting, I think. Let's shift our focus from the charts and the market cycles to a force that can truly, truly move mountains in any market, but especially in crypto: institutional money, the big players. We're seeing some really significant movement in this area for Solana, according to the reports. First, maybe let's just define what institutional commitment really means in this context. And why is its presence considered such a powerful bullish signal for an asset like SOL? Why does it matter so much when the big funds get involved?
Right. Institutional commitment basically refers to large-scale investments, often strategic allocations, made by established financial entities. So we're not talking about your typical individual retail investor buying a few SOL here and there. We're talking about major players, like hedge funds, venture capital firms, corporate treasuries, asset managers, maybe even sovereign wealth funds down the line. These entities are often referred to as smart money, maybe a bit of a cliche, but
Yeah, you hear that term a lot.
you do. And it's because they typically employ extensive research teams, they do deep due diligence, they have sophisticated risk management and investment strategies. They don't usually just jump into things lightly. So why is their involvement so powerful? Several reasons. First, sheer size. Institutional capital brings enormous liquidity into an asset, which can help stabilize prices and allow for larger trades without massive slippage. Second, it adds stability. Institutions often invest with a longer time horizon than retail traders, which can dampen volatility. And perhaps most importantly, it acts as a powerful validation, a stamp of approval almost.
Validation, how so?
Well, when these major players allocate significant funds to something like Solana, it signals to the rest of the market that they have confidence. Confidence in the underlying technology, confidence in the ecosystem's resilience and growth potential, maybe confidence in its regulatory standing, and certainly confidence in its future prospects. It essentially helps to de-risk the asset in the eyes of many other potential investors, both retail and other institutions, who might have been sitting on the sidelines waiting for a signal like this.
That's a great point. So it's not just the money itself, though that's huge, but it's the signaling effect. This institutional endorsement fundamentally shifts how Solana might be perceived. It potentially moves it from being seen as maybe a more speculative, retail-driven altcoin, unfairly or not, to being viewed as a more legitimate, maybe even blue-chip contender within institutional portfolios. And that validation effect could attract even more smart money, creating this kind of self-reinforcing cycle of confidence and capital inflow. That feels like a much more profound market shift than just the initial dollars coming in.
And speaking of dollars, we're not just talking about a little bit of institutional money trickling in here, are we? The numbers mentioned are pretty eye-popping.
Not at all. The figures being reported are genuinely staggering, and they really do indicate a deep-seated belief, or at least a very significant bet, on Solana's future. Our sources are highlighting nearly $3 billion in planned Solana treasury allocations from various institutions.
$3 billion planned.
But
Nearly $3 billion, yeah. That's the figure being cited across several reports, consolidating planned commitments. This is not a small tentative investment scattered across a few funds. This is presented as a massive concrete injection of capital intended for the Solana ecosystem or held as SOL assets. To put that into perspective, that kind of capital infusion can fundamentally transform the supply and demand dynamics of an assets market. It can fund huge amounts of development, improve infrastructure resilience, attract even more projects and users through grants. It's game-changing money. It really speaks to a long-term strategic play by these institutions rather than just short-term speculation or trading.
And crucially, it's not just one anonymous whale moving the market or some single speculative fund making a big bet. We're talking about some very well-known, reputable names in both the traditional finance and crypto investment space making these kinds of commitments, all right? Who are the key players involved here that the sources name?
Yes, the sources do name specific, reputable institutions, which, as you say, adds significant weight to this whole narrative. It makes it much more concrete. We're talking about firms like Galaxy Digital, Mike Novogratz's firm, very well known, involved in broad crypto investment and advisory. Jump Crypto, a major player in Web3 infrastructure development, market making, and venture capital, hugely influential behind the scenes. Multicoin Capital, known for being a very thesis-driven crypto investment firm, often making early bets on promising ecosystems. Pantera Capital, one of the oldest and largest institutional investors, dedicated purely to the blockchain and crypto space, real OGs in institutional crypto. And then there's Sharps Technology, which is a particularly fascinating example we should probably dig into a bit more.
Definitely. But just pausing on that list, Galaxy, Jump, Multicoin, Pantera, these are not fly-by-night operations. These are serious players with deep pockets, sophisticated investment mandates, established reputations, and a proven track record in this space. Their collective involvement, allocating potentially billions towards Solana, signals a profound vote of confidence. It suggests they see something really compelling in Solana's infrastructure, its tech advancements, maybe its developer community, and its long-term viability as a foundational layer 1 blockchain.
Precisely. It's a very strong signal from credible sources.
Okay, so let's pick up on that last name you mentioned, Sharps Technology. You said it was fascinating. Why does that one stand out? Can you detail their specific allocation? And more importantly, why is a company that seems to be outside the traditional crypto investment world making such a significant move into Solana? What does that tell us?
Right. Sharps Technology. They are actually a publicly traded company listed on NASDAQ, developing things like smart, ultra-low waste syringes and other medical safety devices. So definitely not a crypto fund. And they have made a specific, publicly announced $400 million Solana treasury move. They are allocating $400 million of their corporate treasury assets into Solana.
$400 million from a medical tech company.
Into SOL. Exactly. And this particular example is especially noteworthy because, as one source puts it, it highlights growing non-crypto institutional faith in SOL. Think about the implications of that. This isn't a crypto-native VC firm diversifying its crypto holdings. This is a mainstream technology company operating in a completely different sector, healthcare tech, choosing to allocate a substantial portion of its corporate treasury into Solana. Their decision signals that Solana's appeal, its perceived value, might be extending far beyond the usual crypto circles, beyond the traditional crypto-native institutions and investors. It demonstrates that maybe even companies outside the immediate crypto sphere are starting to recognize Solana, perhaps as a legitimate, valuable asset for corporate treasury management. Maybe they see potential in its blockchain technology for future enterprise solutions in their own field. Or maybe it's simply viewed as a strong store of value with significant growth potential compared to holding cash or traditional assets. Whatever the specific reasoning, it indicates a potentially broader, more mainstream acceptance is beginning to form, a belief in Solana's fundamental utility and its long-term value proposition, reaching beyond the crypto echo chamber.
That's a truly powerful statement, isn't it? It really is one thing for crypto funds to invest in crypto, that's their business. But for a non-crypto, publicly traded tech company to put that kind of serious money, $400 million, into Solana's treasury, wow, it really underscores the growing confidence, or at least the growing interest from unexpected places. But let's play devil's advocate for just a moment here. What are the potential downsides or risks these institutions, even Sharps Technology, might be overlooking? Or what happens if their big bet, their thesis on Solana, doesn't pan out as expected? Are these allocations truly sticky capital, meaning they'll hold through thick and thin? Or could they be unwound relatively quickly if market sentiment shifts dramatically against Solana, maybe causing even more volatility on the way down?
Those are absolutely crucial considerations, essential questions to ask. And you're right. While these allocations are incredibly significant and generally interpreted as bullish long-term commitments, no investment is ever truly without risk. Institutions, even the so-called smart money, can be wrong. They make bad bets sometimes. Market sentiment can turn on a dime, especially in crypto. Regulatory landscapes can change unexpectedly. Technological hurdles might appear. However, the nature of these being described often as treasury allocations suggests a potentially longer-term commitment than, say, a hedge fund making a quick tactical trade. Corporate treasuries typically look for assets that can preserve capital and potentially offer appreciation over time to hold their cash reserves, not usually for highly speculative short-term flips. The risk, of course, if their thesis doesn't pan out, is a potential loss on their investment. A large institution selling off a big chunk of SOL could certainly put downward pressure on the price and could trigger a broader reevaluation by the market. But the sheer size, mentioned nearly $3 billion, and the diversity of the institutions reportedly involved, Galaxy, Jump, Pantera, Multicoin, Sharps, potentially others, suggests a fairly robust, multifaceted belief in Solana, spread across different types of players with potentially different time horizons and risk tolerances. It's not all concentrated in one place.
Okay, that diversification of institutional holders makes sense as a mitigating factor. So, assuming this capital is relatively committed, at least for the medium term, how does this directly impact the market mechanics? You mentioned supply and demand earlier. How did these massive allocations specifically absorb supply and turbocharge the path to $300, as one source puts it? Let's get into the nuts and bolts.
Right, the mechanics. This is a crucial point for understanding how this institutional flow directly impacts price potential. When large institutions like these make such significant allocations, they are effectively buying up large quantities of SOL from the market. And crucially, the assumption is they are likely holding it, maybe staking it, maybe using it within the ecosystem, rather than actively trading it day to day. This action directly reduces the available supply of Solana on the open market. the float that can be easily bought and sold by everyone else.
So less SOL available to buy on exchanges.
Potentially, yes. Or at least a significant chunk is taken off the active trading market and put into longer-term holding. At the same time, their visible commitment, the news of these big players moving in, significantly increases demand. Not just the demand from these institutions themselves doing the initial buying, but also from other potential investors, both retail and other institutions, who see this smart money entering the market and decide to follow suit. It creates FOMO, fear of missing out. So when you have a situation with potentially reduced circulating supply and simultaneously increasing demand from multiple sources, well, it creates powerful upward pressure on prices. It's fundamental economics 101, really. The asset becomes relatively scarcer, more sought after, and basic supply-demand dynamics dictate that its value should, theoretically, go higher, potentially turbocharging its path towards targets like $300.
Okay, that connection is clear. Reduced supply meets increased demand equals upward price pressure. Simple but powerful. So we connect this all back to the bigger picture for you, the listener. This institutional backing isn't just numbers on a screen. It suggests a deeper, more fundamental confidence building around Solana's entire ecosystem. It helps move Solana, potentially, beyond being seen purely as just another speculative trading vehicle towards becoming a more robust, long-term investment asset, almost establishing it, as we said, like a potential blue-chip digital asset in the making. And this kind of bedrock support, this institutional foundation, when combined with the bullish technical signals and the favorable macro tailwinds we discussed earlier, well, it creates a very, very compelling narrative for significant price appreciation. And crucially, it could potentially sustain a rally much longer and further than just a short-term pump driven by retail excitement alone.
Exactly. It adds a layer of fundamental weight of staying power to the whole equation.
Okay, so we've really built a strong case here, looking at multiple angles. We've discussed the powerful golden cross signal on SLBTC and its history. We've talked about the helpful alt-season tailwinds. We've detailed the specific technical setup on SLUSD, aiming for that $300 mark. And now we've layered on this massive institutional commitment that seems to be fundamentally altering the market dynamics. That's a lot of powerful signals all converging. But the big question then becomes, what happens after $300, assuming Solana gets there? Is that the ceiling? Is that the end of the run? Or is there a potential next phase we should be looking out for if SOL continues its ascent?
That's the exciting part, isn't it? Looking beyond the immediate target. And many analysts, based on the sources, aren't viewing $300 as the ultimate peak at all. Rather, they see it more as a significant stepping stone. A critical psychological resistance level, yes, but one that, if broken decisively, could open the door to much higher prices. The sources suggest that Solana has undergone a lengthy 18-month consolidation period before this recent potential breakout phase.
18 months? That's a long time in crypto years. What's that consolidation period tell us?
It tells us quite a lot, actually. To clarify for you, consolidation is a phase where an asset's price basically moves sideways. It trades within a defined range, often after a previous strong move, either up or down, or during a prolonged bear market. During this period, the market is essentially digesting the previous move. It's absorbing supply from sellers, it's shaking out the weaker hands, those less confident or shorter-term investors who might sell off easily, and it's basically building energy before its next potential large directional move. Think of it like a coiled spring, gathering potential energy over time. 18 months is, as you say, a very long time in crypto. It feels like an eternity for many investors who live through it. This prolonged coiling period, this base building, suggests that the recent price action, this potential move towards $300, isn't just a fleeting spike built on nothing. It suggests there's a solid foundation built over a year and a half, indicating a certain maturity in Solana's market structure and potentially setting the stage for a more sustained, powerful move once it breaks out of that range.
Okay, so for over a year and a half, Solana has been quietly, or maybe not so quietly, gathering this energy, building this base. And now the analysis suggests it's tightening against resistance with rising on-chain activity. We know the resistance is around $300, but what did that second part mean, rising on-chain activity? What exactly does that signify, and how does that fundamentally support a potential price target beyond $300, maybe towards $400, rather than it just being more chart speculation?
Right. Rising on-chain activity is a critical fundamental indicator. It takes us away from just looking at the price chart and looks at what's actually happening on the Solana blockchain itself. It's about usage. It signifies increased usage and fundamental growth of the network. This includes things like an uptick in the number of daily active users or wallets interacting with the chain, a higher number of transactions being processed per second, showing the network is busy, It also includes growth in the ecosystem's decentralized applications, or DApp apps, are more people using Solana for DeFi, for NFTs, for gaming, for depend. And related to that, an increase in the total value locked, TVL, within its DeFi protocols is more money being locked up and used within Solana's financial system.
So it's measuring actual adoption and utility.
Exactly. These metrics demonstrate real-world utility and genuine adoption of the platform. When you see an asset's price tightening against a key resistance level, like $300, while its underlying network activity is simultaneously increasing, it's a very powerful combination. It suggests that the upward price pressure isn't just based on speculation or chart patterns alone. It's being fundamentally supported, even driven, by growing usage and value creation on the network itself. It means the platform is actually being used more, which creates inherent value, attracts more developers wanting to build there, attracts more users wanting to use the apps, and this forms a virtuous cycle that can genuinely drive long-term sustainable price appreciation, well beyond just technical targets.
That makes a lot of sense. It's the real world utility and adoption actually driving the value proposition, which feels like a much more robust foundation for future growth than just lines on a chart. So if these on-chain trends continue, if the usage keeps growing, and if Solana manages to break that initial $300 barrier decisively, what are the extended price targets that analysts are looking at beyond that mark? Are they talking 350s, $400, higher?
The extended view presented in some of the analyses is indeed quite optimistic, but it's always contingent on confirming those new highs first. That's the key condition. Some analysts view $300, $400 as the next realistic target range if new highs are confirmed. So yes, that $400 level is being mentioned. Now, confirming new highs means not just briefly poking above $300 and falling back. It means decisively breaking through, maybe retesting $300 in new support, and then holding above it. If that happens, it would usher Solana into a new phase of price discovery. Previous resistance levels become less relevant, and the market starts trying to establish new valuation benchmarks based on this renewed momentum, institutional interest, and on-chain growth. The implication here is that $300 isn't necessarily seen as the ceiling by everyone, but perhaps more like a significant psychological and technical gateway. Once passed, there could be considerable room for further growth, potentially quite quickly, as there might be less historical price resistance overhead. Often, analysts will look at Fibonacci extension levels in price discovery, and those could easily fall within that $300, $400 range, or even higher, depending on the strength of the move.
Okay, so the message is break $300 convincingly, and the path potentially opens up towards $400 as the next major zone. That provides a compelling potential longer-term outlook, assuming the conditions are met. So for you listening, this really means watching for that confirmation above $300 is crucial to truly gauge if this next potential phase of growth towards $400 is actually materializing. And how can someone like you actively monitor this potential growth in real time? Besides just watching the price, is there a kind of on-chain thermometer, as the outline called it, that we can use? Specific metrics to track these developments and maybe confirm or deny what the price charts might be telling us.
Absolutely. Relying solely on price can be deceptive sometimes. Tracking key on-chain and market metrics can provide invaluable real-time insights into the underlying health, sentiment, and momentum of the move. It acts as your on-chain thermometer, giving you a better feel for the market's true temperature. The sources suggest looking at a few specific indicators to get this broader view. Firstly, SOL perpetuals volume. Perpetuals, or perps, are futures contracts that don't have an expiry date, very popular for trading crypto. High trading volume in SOL perps, especially during an uptrend and when funding rates are positive, meaning longs are paying shorts, indicates strong institutional and speculative interest. It often confirms the strength and conviction behind the price action.
Okay, so high volume in the futures market signals strong interest. What else?
Secondly, monitoring liquidity growth across Solana's decentralized finance DeFi ecosystem. This basically means tracking the total value locked, TVL, the total amount of capital deposited into Solana's DeFi protocols for trading, lending, staking, etc. Is that number growing? Higher and growing liquidity generally supports more stable and significant price movements because it means larger orders can be filled without causing drastic price swings. It shows capital is flowing into the ecosystem and being put to work, indicating confidence.
Got it. Healthy DeFi liquidity is a good sign. And the third one.
And thirdly, consistently tracking SLBTC strength versus other major altcoins. We already talked about the SLBTC Golden Cross, but you need to keep monitoring this pair. Is Solana continuing to outperform Bitcoin? And how is it performing relative to other major competitors, say, other layer ones? This helps confirm if Solana is genuinely leading the pack during a potential alt season, reinforcing that narrative and its position as a market favorite. And beyond those three, you could also keep an eye on simpler metrics like the trend in unique active wallet addresses interacting with Solana daily and the daily transaction counts. Are more people actually using the chain day to day? That's a fundamental sign of health.
That's a great toolkit. Perpetuals volume, DeFi liquidity growth, relative strength against Bitcoin and other alts, plus basic user and transaction metrics. Gives you a much fuller picture. And this really raises an important question for you, for anyone deeply engaged in these markets. What metrics do you personally find most compelling when you're trying to evaluate an altcoin's breakout potential? Is it primarily the technical chart patterns? Is it the on-chain data showing usage? Or perhaps is it the flow of institutional money that really sways your conviction the most? Or maybe, like we've discussed, it's the confluence of all three. Knowing what signals you trust most, what you want to watch for, can truly empower you to make more informed decisions in this fast-moving market, and perhaps even spot the next big opportunity before the crowd does. Something to think about.
Definitely something to personalize based on your own research style and risk tolerance. Hashtag tag outro.
Well, we have certainly covered a lot of ground today, looking at Solana's potential path forward. Hopefully, this has offered you a truly comprehensive look at where things stand right now. Let's just briefly recap the key insights from our deep dive, bring it all together. We started with that powerful golden cross signal appearing on the SOLBTC chart, a historically accurate indicator, at least for Solana, that has preceded massive rallies in the past, really underscoring the potential for significant outperformance against Bitcoin itself.
Yeah, and then we connected that specific signal to the supportive macro environment, the bigger picture. We talked about a potential emerging alt season, maybe marked by Ethereum starting to outperform Bitcoin, and this idea of significant capital rotating out of BTC and into higher beta tokens like SOL, providing potentially strong market tailwinds.
Exactly. Then we layered on the specific technicals on the SLUSD chart. We looked at that confluence of bullish indicators, the broadening wedge or megaphone pattern, a strong bullish weekly RSI suggesting sustained momentum, and the price holding above key EMAs acting as dynamic support. All pointing quite clearly, according to analysts, towards that initial $300 target zone.
And crucially, we didn't stop there. We also examined the impact of that massive and apparently accelerating institutional commitment. Nearly $3 billion in planned treasury allocations mentioned, involving major players like Galaxy Digital, Pantera Capital, Jump Crypto, and that interesting example of Sharp's technology. This institutional flow fundamentally shifts the supply-demand dynamics and adds substantial, potentially sticky fuel to the fire.
Right. And finally, we looked beyond just $300. We considered Solana's extensive 18-month consolidation period as potentially building a strong base, combined with that rising on-chain activity indicating real usage. This sets the stage for potential extended targets, maybe in that $300 to $400 range if those new highs around $300 are convincingly confirmed. It highlights the fundamental growth that could back up these technical moves. And we also tried to arm you with that on-chain thermometer, those key metrics like perpetuals volume, TVL growth, and relative strength to help you track its real-time progress and empower your own ongoing market analysis.
It's a remarkably comprehensive picture when you put all those pieces together, isn't it? The technicals, the macro, the fundamentals via on-chain data, and the institutional flows. And considering everything we've unpacked today, those historical technical patterns that seemed to work before, the current potentially favorable market dynamics, and this significant institutional capital apparently flooding in it, really does raise an important final question for you to ponder. Do you think that institutional Solana treasury demand, that big money coming in, is actually a bigger bullish signal right now than the technical chart patterns? Or is it really the potent combination of both, that confluence, that makes Solana's path towards $300 and potentially beyond seem so incredibly compelling to so many analysts right now?
Institutions versus technicals, or both. That is something to chew on as you watch these exciting markets unfold.
Food for thought.
Exactly. Something to really think about and observe for yourself as things develop. Now, if this deep dive into Solana's potential breakout path spiked with all these golden crosses, treasury demands, alt season mechanics, and chart patterns, if it gave you clarity, if it gave you some deeper insight, we genuinely appreciate your support. It helps us keep doing this. So please, if you found value here, take just a moment to like this deep dive, subscribe to our channel if you haven't already, and maybe hit that notification bell so you don't miss the next one. Your engagement, your likes, your comments, your subscriptions, it truly fuels our work. It helps boost our visibility in the algorithms, which is really important. And it allows us to keep creating more smart, strategic crypto coverage like this every single week just for you. So thank you for joining us on this deep dive into what might be Solana's golden horizon. We appreciate you tuning in.
Yeah. Thanks, everyone. See you next time.
We'll see you next time.